Fundsupermart.com.
Hi, what is your outlook for Asian equities over the next 2 to 3 years?
I think just looking at markets recently, and we've had sort of issues with Europe for quite some time now. So sort of, the crisis lurching back and forth. Actually, our long-term outlook for Asia is actually positive. So from a long-term perspective, we're actually bullish on the region because, if you look at the structural trends that are playing through Asia and the demographics in Asia, that continues to be supportive in the long term. Obviously, it's a very weak macro environment, so there's essentially issues in the US, deleveraging is going on, the euro crisis. We don't think that there's going to be an easy resolution to that problem. We're still looking at sort of issues with Spain, Italy, Portugal coming back. Whether or not Greece will exit the euro remains a question mark. So all those, I think, pose shorter-term headwinds to the region, to Asian stock markets at least. So you can expect volatility. But if you look at sort of the underlying fundamentals of Asia, both on the government side, so on the fiscal side, as well as on the corporate side of Asia, actually it looks very strong. So, in terms of having the ammunition and the arsenal to deal with the headwinds that are coming, we think that Asia is able to weather the storm. So policymakers have levers to pull if necessary. It's not going to be an easy time, so there will be impact to earnings and margins and things like that. But on the longer term, we are positive on Asia. So from a valuation perspective, and for investors who are keen to come into Asia, they should look for sort of opportunities to come in to the market.
The twin engines of the Asian economy, India and China, both seem to be facing headwinds in their economies. Should investors be concerned?
I think in the shorter term, obviously, with slowing global growth, you see growth in China slowing as well. India has its own issues in terms of the twin deficit, and in terms of the consumption as well as the investment cycle in India slowing. So both these markets have their own shorter-term issues. But again, as I was mentioning just now, the longer-term dynamics and the longer-term trends remain intact for both these markets. But not just China and India. If you look across the region, even developing emerging markets like Thailand, Indonesia, again, sort of very, very regular stories that you hear about urbanization, the farmers moving into the cities to find jobs and factories. Those trends will continue to play out in the longer term. So the shorter term headwinds in the financial markets, we don't think will put an end to that sort of a development. So that's a long-term thing that will play through Asia. So that remains intact for China and India. But obviously the implication for markets and for shorter-term earnings, there will be some headwinds, there will be some pressure on companies, which is why it's very important for investors to, and for fund managers essentially, to take a very fundamental approach to selecting their investments across the region.
What do you think will be the impact of a prolonged Eurozone debt crisis on Asian markets?
I think the impact for stock markets, because obviously stock markets in Asia, in Europe and in the US, they're not going to decouple. So any bad news that comes out of Europe, as we saw in markets yesterday, markets are very sentiment driven, liquidity driven as well. So the implication for stock markets is that you're going to see volatility. But again, because we hold a longer term positive view on the region, then any weakness should be taken as an opportunity to accumulate. I think, looking at current valuations, we think that, it may not be, it's not at the lows of the previous crisis. So, there is probably going to be more downside. So, in terms of choosing an entry point, I think you have to be selective. But again, that in itself offers opportunities to invest in the region on the longer term.
Within the region, which countries are likely to do better than others?
I think from our perspective, we tend to take a bottom-up, so a more stock selection perspective to markets. I think from a yield and an income perspective, the markets that we tend to favor at the moment are the more developed markets. So namely, as in terms of looking for stock opportunities, there are more opportunities in the developed markets like Hong Kong, Singapore, even Australia, where, again, corporate governance tends to be stronger, but also, by virtue of the fact that companies listed in these markets don't necessarily mean that they only play into the developed markets. So there are companies that are listed in Hong Kong, conglomerates that are listed in Singapore who play on the ASEAN consumption theme or the broader Asian consumption theme. It's just that, for these particular markets, in terms of valuations as well, is where, from a yield perspective, we're finding more opportunities. But I think generally, on a whole, we are quite positive on the region. There are some markets where we tend to be a little bit more cautious from a valuation perspective, like India. But otherwise, I think from a stock selection perspective, more the developed markets at the moment.